Hey gang, this is Bonica. I want to talk to you today about, again, financial management, some very basic skills. This is going to focus on checking and savings accounts. So very basic things that you need to know to be successful. And again, simple rules. This is not sophisticated stuff. It's meant to make your life simpler. If you want to be sophisticated, there's plenty of ways to do that. But most finance, like I said before, it can be managed with some simple rules. So let me talk about what those are. So we're going to talk about, like I said, banking. And so first, I would recommend that you can get a national banks and local banks, right? I would suggest you find a local bank, either an actual bank with its headquarters local to you, or at least with a local branch, right? So there are a lot of national banks, Bank of America, for example, that have branches kind of all over the country. That's fine. Or you could pick your local credit union. I really strongly urge you to find a bank that first it has a branch that's local to you. So it could be a national bank or it could be a truly local bank, but it needs to be a bank with a branch near you. And why do we need that? Well, every now and then you're going to need to go in and actually meet with customer service. One thing you'll need, for example, potentially, is to be able to get a cashier's check, which is a special kind of check. Yeah. So it's called a cashier's check. It's a special kind of check that is issued by the bank that says that the money that this check is made out for, the amount of money that this check is made out for, is actually available in this person's account. And you can get those from, from banks. If you do long distance banking, you can get them from, a national bank that maybe doesn't have a local branch, but it takes days. They're going to mail it. They're going to physically mail it to you. So it could take days, or if you, try to get a rush, it winds up costing you a bunch of money to pay for FedEx. So I would say having a local bank or at least a local branch of a bank in your town where you could drive to it fairly easily is pretty important, because there are services like cashier's checks that just come up, and it's useful to have a person to actually talk to. Okay, so start with that. Now, I'm a big fan of electronic banking or e-banking. We do most of our banking electronically. A lot of banks now have apps. So I have three bank accounts, two with national banks that don't have local chapters, and then I have a local bank specifically for these kinds of issues. That's getting a little more complicated than you need. I could do all of my banking with my local bank branch, but I was in the military for forever and we moved around a lot. So having one fixed location for me is a relatively new thing. So my life is a little more complicated, maybe just because of historically speaking. But I'm a big fan of e-banking, like I said, and you can usually get a phone app that goes with your banking that allows you to do some bank management, or at a minimum, you can manage some of your banking needs on the internet, and that's super useful. So I suggest that you find, again, a local bank or a bank with a local branch in your town or within driving distance that offers e-banking services, and almost all of them do now. The e-banking allows you to make electronic deposits, from your phone. I'm a big fan of that. It allows you to, manage your accounts from home rather than having to go in. There's a lot of really great things about e-banking. So you want to set that up. You can also set up some automatic payments and things like that, again, a little more complicated, but really useful to be able to access your bank information either from from your web browser or from your phone. So suggest looking into that. So that's that. Now, talking about your banking needs. So basic ideas here. You're going to need, number one, a checking account. Right. So what is the purpose of a checking account? Well, this is your checking account is to allow you to write checks for your immediate financial needs. So this is very much short term. Really, banking really is all about my talk today is really all about short term needs, right? From a banking perspective. So checking account, these are your short term needs. So these are things you're going to pay. You're going to pay your bills with checks, maybe, or if you don't do them electronically. It's really important. Some places don't take electronic checks, right? So you want to be able to have checks available to you. You may not use them all that often, but you really do need to have access to them. Now, how much money should you have in your checking account? My rule of thumb would be 1 month's salary. If you want to get a little more fancy, or 1 month's expenses. So I'm going to keep saying I'm a fan of simple rules, right? So simpler is better. 1 month's salary hopefully is more than 1 month's expenses if you're managing your spending well. So having 1 month's salary would require that you deposit more in the checking account than 1 month's expenses. So it's really easy. So again, simple rules, right? I'm a big fan of simple rules here because you're more likely to follow simple rules. So if you know I make $2,000 a month, right? Then how much should you have in your checking account? You should have $2,000 because that's 1 month's salary. The alternative is you set aside 1 month's expenses. This is also fairly simple as long as you can take the time to calculate how much do you spend, right, on those kind of mandatory expenses that you've signed yourself up for that we talked about during the spending lecture that I did. So if I have $1,500 a month in expenses if I add up, say, my rent and how much I spend on groceries and my car payment and my health insurance and all that all adds up to $1,500. Well, okay, then if that's the case, then you should have $1,500 in expenses. It takes a little more effort than just saying how much do I earn in a single month. I'd say go with the simple rule, but if you want to take some time and think about it and pay attention, then 1 month's expenses is fine. So somewhere in that vicinity, right? It should be in your checking account should be about that much money. Why is that? Well, you always want to know that you can pay off all your bills. You do not want to run into a situation where you can't pay off your bills, right? And so if you're pretty good about managing your expenditures, then you should have a pretty good idea of how much you're spending each month. Okay, so there's the checking account, 1 month's salary or 1 month's expenses, if you want to take the effort to figure out what your 1 month's expenses are. So then 2 is savings accounts, right? And I'm saying accounts, plural, because I'm going to suggest to you that you need at least 2 savings accounts. Now, what's the difference between a checking account and a savings account? Well, first of all, checking accounts come with checks. Savings accounts don't. So you have to, in order to use the money that's in your savings account, you either have to go to the bank and say, move money from my savings account to my checking account, or you have to go to the bank and say, take money out of my savings account and give it to me in cash so I can go spend it. So there's no checks associated with the savings account. Second, right, checking accounts typically pay 0 interest. Savings accounts typically pay some small amount of interest. These days, they're paying like 0.25%. Well, 0.25% is still more than 0, which is what checking accounts pay. So if you've got money hanging around for a long period of time, you'd like to earn some interest on it. So savings accounts will do that. Now, again, this is all kind of focused on short-term needs, right? We'll do another lecture on investing. This is not investing. This is simply helping you manage your short-term financial requirements. Okay. So this is not investing. So savings accounts. So we're going to use savings accounts for longer-term goals. Checking is meant for the immediate spending. Savings is meant for somewhat longer-term goals. So probably goals that could be required within a year. So what might that look like? So like I said, I want you to have at least 2 savings accounts. The first savings account, so I'm going to say savings account 1, is going to be for your emergency fund. Okay. Your emergency fund should have 3 months salary, and the rule of thumb is 3 to 6 months. I'll say if you're younger, let's go with 3 months salary goes in here. Okay. That's a lot of money, especially if you're just starting out. That's a lot of money. You need to have this because you just never know what's going to happen. Okay. So there might be a global pandemic, for example, and you get laid off from your job and you have no income coming in for a indeterminate period of time. You could get sick, right? And not be able to go to work. And maybe you have a job where you're not on a salary and you wind up having to take unpaid leave. This is a situation where you don't want to not be able to pay your rent. So if you're doing what I said and you have 1 month's salary in your checking account and then you have 3 months salary in your emergency fund, you're good for 4 months. It gives you a fair amount of time. So even if you do get sick or you get injured, right, you get in a car accident and you're out of work for a long period of time, what you know is you've got enough money set aside to float yourself for 120 days, 4 months, right? 6 months would be better. But for a starting point, 3 months is pretty darn good. So this emergency fund is meant to cover if you have a sudden loss of income for a sustained period. So this is an emergency fund. You fill this emergency fund and then you just set it aside and you forget it's there unless something terrible happens. Another way to think about this emergency fund is you are no longer trapped in a job. So let's say you are happy at your job, you've saved your 3 months salary, and your boss gets a promotion and moves on, and you get a new boss, and this new boss is the boss from hell. Well, maybe this is money that allows you to walk away from a bad situation, right? So that's another way to look at this. There's a crude way to call this is FU money, and you can fill in what the F stands for. So this is money that gives you, again, some financial freedom, which is what this is all about, right? I talked a lot about that in the spending video. So this gives you some financial freedom. It protects you, right, from unexpected losses. It also gives you the ability to walk away from your job and gives you some time to find a new job if necessary. So this is savings account 1. Savings account 2, and you could kind of go on from here, 2, 3, 4, and so forth, are targeted accounts. So an example would be, I as a professor, I work on a 9-month contract. What that means is I don't get paid during the summer. The university pays me for 9 months of the year, and then 3 months of the year, I don't get any salary. Well, that's not an emergency, right? I know that come June, my paycheck stops and it doesn't pick up again until September. So it's not that this is not an emergency. This is a recurring fact of my life. So one of the things my wife and I have is we have our emergency fund, and then we have a summer pay savings account, right? So this is a targeted account that I call my summer pay account. And what I do is I put into it roughly 3 months salary that just sits there for the summer. And then when June rolls around and my pay stops, I can start taking money out of my summer pay account. So that's one example. If you are in that sort of work, you might want to think about that. Most people are not in, 9-month contract kind of situation. But you might also then, again, so that's a targeted account. Other targeted accounts would be things like, a vacation account. So instead of charging your tickets to Disney World and all that, what you want to do instead is save up enough cash so that you can have enough cash to cover your vacation, wherever it is you want to go, Disney World or Cabo or Rome, take your pick. You figure out how much is it going to cost me roughly to go on vacation, and then you set up a savings account to do that. Other things like a car down payment, right? You might be thinking, okay, I need to buy a new car. I set aside enough money, each month till I get to my, $5,000 or whatever I need to make a down payment on a new car. House down payment would be another example. Also, big acquisitions like that 72-inch TV that I joke about. I got $2,000 I'm going to spend on a TV. Well, set up an account, savings account, and put money in it. And when you have the $2,000, go buy the TV. Don't buy the TV with consumer debt prior to your having the money necessary to pay for such a purchase, right? So if you're doing e-banking, you can typically set up a savings account with a couple of clicks. So the bank that my wife and I use allows us to set up, pretty much. I don't know if there's a limit on how many savings accounts we can have, but it just takes a couple of clicks, and suddenly there we have a new savings account. So I would recommend at least one targeted account that would kind of allow you to save for bigger purchases. So these are not your kind of like, dinner out kind of savings. This is stuff that's going to cost, maybe something close to a month's salary, right? So you're going to set that money aside and accumulate it before you make the big expenditures. Okay. So that's it. This is basics of banking. So the lessons are: number one, you want to have a bank you can walk into. So whether that's a local bank or a branch of a national bank, so that you can get services like getting a cashier's check day of. You want to have a bank that provides you e-banking services, whether that's through an app on your phone or through a browser at home. Either one, you really want to have e-banking available to you in 2020, 2021, 2022, whenever you're listening to this, right? Then we want to stick with simple rules. Checking account is meant to handle your day-to-day business. It's going to give you the ability to write checks. The simple rule is 1 month's salary or 1 month's expenses if you want to take the time to figure it out. I go simple is better. So if you make $2,000, $2,500 a month, $5,000 a month, whatever it is, I would use that as my simple rule. It'd be like, okay, I'm going to try to keep a $5,000 balance in my checking account. As I spend money, I'm putting money back in. The disadvantage of a checking account is you earn no interest. So you want to then use savings accounts. And I like to have multiple savings accounts for different purposes, right? So the first one you definitely want to have is an emergency fund with at least 3 months salary, probably not more than 6 months salary, but target 3 months salary first if you're a young person, right? Then, because it's so easy using e-banking to set up savings accounts, use your savings accounts to manage your goals for consumption. In particular, things like, vacations, car down payment, house down payment, buying a big appliance like a new computer or a new TV or anything like that. Okay, so that's it. Those are the basics. I hope that you found that useful, and I'll talk with you again soon.